All right, so there is one concept that I have been using in my recent trades, and my win rate has gone through the roof. Like, it has gotten so much better, and I wish I could, basically tell you to not sleep on this concept. This is ICT's strongest confirmation concept, and I'm going to teach you each and everything in this video, starting from how to take the trade, how to frame the trade, and where to quit. So this is going to be a very, very important video. If you have an attention span of a TikToker, I suggest you leave the video right now, because this is going to be a raw video. There will be no editing, and I want you to focus as much as you can, because this concept can literally change your life. All right. So the concept that I'm talking about is SMT divergence. A lot of people sleep on this concept, but if you use this concept with your trades, I promise you your win rate is going to get so much better, and you will be able to avoid losing trades. All right. So let me just draw this out real quick, right? And we have this. Perfect. So imagine, let's assume that we had this high time frame PD arrays. So PD array, right? Now, so this price action is EU, Euro USD, right? And this is GBP USD. So once price comes into some form of high time frame PD array, we are looking for SMT divergences. Now, what is an SMT divergence? So the SMT divergence happens between two or more correlating pairs or assets. So if there are pairs that correlate with each other, or there are assets that correlate with each other, for example, EU and GU, GBP JPY and AUD JPY, Bitcoin and Ethereum, NAS 100, S&P 500, US 30, right? Then you can look for SMT divergences. So once price comes into your high time frame PD array, you look for this pattern. So on EU, if price creates a higher high, higher low, and then a higher high. But on GU, price creates a higher high, and then a lower low, lower high, and then a lower low. So price fails to create higher high on GU, but it successfully creates a new high on EU. Now, what does that mean? It means that GU is showing strength in being bearish, because it failed to create a high, and is showing weakness in being bullish. And now once you get a higher high, that confirms that market makers and algorithm is in the play. Now this tool alone can literally change your life. You do not need this concept is way powerful than market structure shifts. And when you combine all of this together, I guarantee you will be at the right side of the market 70 to 75% of the time. So my strategy is very simple when it comes to using SMT divergence. I use the higher time frame PD array. I trade with the higher time frame order flow. And once price comes into my higher time frame PD array, I'm looking for market structure shifts and SMT divergences on lower time frame. That's going to confirm that, okay, price is going to reverse from this level. Similarly, if I flip the chart over, you can see that we have a higher time frame PD array. So once price comes into the higher time frame PD array, we drop down to a lower time frame. So let's assume that this higher time frame PD array is a daily time frame, and price comes into this daily time frame PD array. I drop down to 1 hour time frame, and I'm looking for a 1 hour SMT divergence or a market structure shift, and then an SMT divergence, right? So once you get an SMT divergence, right? So let's assume that price creates a lower low, lower high, lower low on EU, but on GU, price creates a lower low, right? And then we have a high, and then we have SMT. So SMT is going to look something like that. Now, how do you actually take your trade when you get the SMT, right? So basically, you are looking for a break of structure, right? You're basically waiting for a break of structure after you get an SMT divergence, or And another way that you can take your trade, so once you get like a market structure shift, right? So let's assume that there was some form of high over here that was broken and that gave you a market structure shift. And then you have your 1 hour PD array that could be your fair value gap, right? So this is like your direct entry. You're not waiting for a break of structure after SMT divergence, right? So, and let's also assume that we get a market structure shift on EU as well. And we had this PD array marked out here. Now, on EU, price didn't respect the PD array and it took out this low. But on GU, price went into this PD array and it failed to take out this low over here. Now it is showing strength in being bullish and it's showing a weakness in being bearish, if that makes sense. So you can literally just take a long position once you see that price is in a PD array on GU, and on EU, price has taken out this low. So this is very simple. Once price takes out this low over here on EU, and if you see that either one of these price is in, like, let's say in this PD array, you can literally just enter directly. Or to confirm it even more, you can go to even lower time frame. So this was 1 hour time frame. You can go to 5 minute time frame, and after SMT divergence, you can look for a market structure shift, take your entry, and go for 1 to 2, 1 to 3, whatever your higher time frame target is. Now, this concept works with every single model, whether you are using a market maker model, whether you're using external to internal liquidity method, whether you're using simple order flow, it works really well. So I'm going to give you guys some examples, and that's going to clear each and everything. All right, so here is example 1, looking at Euro USD, and the order flow is clearly bearish on the 1 hour time frame. So I'm going to mark out this auto block here, right here, because this auto block is in the premium. So there's a potential that this auto block is going to hold, right? So once price comes into the auto block, I'm dropping down to 5 minute time frame. Now I'm looking for SMT divergences, right? So I'm just going to open another chart over here. Just let me delete this. So to make your life easier, there is an indicator that's going to find SMT divergences for you. I suggest you find them manually, but if you can't find them, there's an indicator. If you type in SMT, you're going to get this by Lux Algo. I'm not affiliated with them, but this is a very great indicator. So you're going to go to the settings, and in the comparison symbol, so if you are on Euro USD, you want to choose the correlating pair. So that's going to be GBP USD or DXY. If you were on NAS 100, you would choose S&P 500 as your comparison symbol. So if I turn on the SMT tool, you can see that we have SMT when price reached that 1 hour auto block, right? So on GU, we got the market structure shift, and on EU, we have a displacement, and we also have SMT, right? So once you get SMT on a key level like this, right? So you can see we had created a higher high, but we failed to create another higher high on EU. But on GU, we created this high over here. As you can see over here, we have this. Actually, this is the high. And just around here, we created this high, right? And then we had a market structure shift. And you can see that we have this fair value gap around here. So the great thing about SMTs are, if you see a setup like this, you do not even need a market structure shift, because look at this displacement, right? And we have a fair value gap. We have SMT divergence from a key level, from 1 hour auto block in a bearish order flow. So literally, this is the best setup that you can take. And if you went short right here, put your stop right above this high, right? And you target it somewhere around here, it would have played out perfectly. So you're going to see how well this played out. Now, of course, this is hindsight, but these setups are very, very powerful when you find SMT on a key level, right? You want to be trading. So let's just wait for the price to hit the take profit level, and there we go. So very easy stuff, guys. You just want to wait for price to come into your higher time frame PD area. You drop down to a lower time frame, and then you are looking for this type of setup. You can get a market structure shift, that is even better. But if you don't get a market structure shift, right, when price comes, or a break of structure, now you could have also, we got a break of structure after SMT, so that is even better, right? We had this fair value gap, and that was filled. However, you can see that in that case, our stop loss would have been really big. We would have put our stop right above here, and our entry would be here. So that would give you a very low risk to reward ratio. So that is why it is sometimes okay to take your entry like this, because number one, we had a market structure shift on GU, right? And if you really look at this from this point of view, you can see that we had reached the key level, that we had displacement with SMT, right? And then we had a fair value gap in the premium, and that's when we took our trade and we targeted this low over here, considering the fact that the order flow was also bearish, so everything was aligning perfectly. Let's move on to the next example. All right, guys, so here is another example, and as you can see that we have this key level marked out right here, right, on US 30, and we have NAS 100 as a correlating asset to look for SMTs. Now, once price reaches the key level, I'm dropping down to 15-minute time frame, and I'm looking for SMTs. Now, if I turn on the indicator here, so this example is going to give you the reason why you should sometimes avoid using the indicator. So the very first step is, let me just disable this, is we are either looking for SMT, right? So price reached the key level somewhere around here. So if I look, there is no SMT at the moment, right? But once you get the market structure shift somewhere around here, and if I disable this, you can see that we have, oops, my bad. We failed to take out this low on US 30, but we took out this low on NAS 100. And if I turn on the indicator, you can see that indicator failed to identify the SMT divergence. So you want to be very careful. You should be looking at indicator and also with your eyes manually to search up for SMT divergences. And you can see that price took out this low, but it failed to take out this. So now you can see that we were in an auto block as well when the SMT happened. So you can see that price came into the auto block at 8:30 open. That is beautiful, right? We have this auto block, right? It swept the liquidity, and then afterwards we had a market structure shift. So once price reached this auto block on US 30, price actually swept this low on NAS 100. So as soon as price went below this low and the price on US 30 was still inside this auto block, I would have taken my low risk entry. Now, after that, you can see that we had a break of structure. So this could have been your second entry through this fair value gap. Very easy and very powerful concept, guys. Just stop sleeping on this concept, all right? So yeah, guys, that is pretty much it for the video. Some correlating, I will give you some options. So again, EU, GU, right? You can even try NZD/USD. Now you can also try EU and DXY. You can also try GU and DXY. You can try Bitcoin and Ethereum. You can try, US 30, NAS 100, S&P 500. You can try AUD/JPY and GBP/JPY, or GBP/JPY and CHF/JPY, and all those pairs, guys. All right, guys, I rarely do this, but if you are interested in taking your trading to next level, then you can join my private course and my private Discord server. Once you join, you get access to a Discord server where I share signals and market analysis. You get weekly Q&A and market forecast. You get profitable trading strategies that actually work. All right, I got tons of students funded, and I'll help you get funded within 3 months as well, right? This is a video if you want to watch, and it's going to provide a lot of information about the course and all the students that have passed the the problem challenges. So for the course content, you get ICT basics if you are just starting out. And then you got the no daily buzz strategies. Basically, these strategies work without daily buzz. The most mechanical strategies Very, very easy. These are like 5-6 strategies, and there are a bunch of examples with each strategy. Then we got the ICT essentials that you must learn in order to move on to the last section of the course, which is advanced trading strategies. And this section is being updated like every month. All right. So you got the market maker models, you got the daily bias, you got silver bullet with bias, and every single thing. 9 hours of content, guys, for only $150. So if you are interested, it is not necessary, but if you are interested, you can just give it a try. So yeah, I'll see you guys in the next one.